Hey, what's up, everybody? Welcome to episode number 139 here on season 1. And today we are talking about an in-depth look into VOO, or also known as large company stock, here on Acorns. So we're going to take a close look at that. That's the Vanguard S&P 500 ETF. So what that specific ETF is doing is it's investing into those same companies that are involved in the S&P 500. So anyways, let's go ahead and just take a look on the monitor. So what we're going to do is we're going to first go to Yahoo Finance and just going to briefly look at the summary here. So I don't really care about the 1 day. I'm looking for max on this. So obviously since inception, since September 6, 2010, they've ran up to from, what is that, about $100 or so? $100 to about $236. So in the course of 7 years, they ran up quite a bit. Basically, they're year to date. So if you were to invest a year ago, today, you would have made 14% return on that account. So that's not too bad over the course of a year, actually. And then we're going to go down to, we could look at their profile real quick. Nothing really here. This is more of a boop, boop, boop. We don't want to care about options. Holdings maybe might be important. So this is going to give you the sector weightings. It's going to be what the majority of their profile is invested in and the percentage breakdown on that. So right now they're heavily invested into technology, which would make sense. A lot of the biggest companies on the S&P 500 are going to be tech companies. Historical data, we don't really need to look over that too much. And then we're going to go down to performance. Year to date, they've done 14% compared to other companies in that category. Have done 7.50, so obviously beating that. The only thing that they really lost in is the 5-year, which they have done 14.17, where the category was 15.76, and they haven't been able to do the 10-year or the last bull market, last bear market. And then the annual total return of history, they've got 11.93% in 2016. Took a little bit off the table in 2015 with a 1.35. And then over the last 4 years before that, they've done pretty well. And then 2011, they took a little bit as well. So overall, the company has done, or the ETF has done actually very good, very well, performance-wise. Anyways, but let's go ahead and actually look at the Vanguard website for this. So we want to go to we don't want to look at the price and performance. Yeah, we want to go overall. So this is the ETF invests in the stocks that are in the S&P 500 index, representing 500 of the largest U.S. companies. Goal is to closely track the index return, which is considered a gauge of overall U.S. stock returns. It offers high potential for investment growth. Share values rise and fall more sharply than that of a fund holding in bonds. So this has no bonds in it at all. It's just simply stocks. And this is more appropriate for the long-term goals where your money growth is essential. Let's go ahead and this is today's performance or something like that. So it did pretty well yesterday because the market did go red on the day before that, and so then we had a nice good peak or another run up on the day after, which usually happens, especially with a hard drop like that. That's pretty. So since inception, they pretty much mimicked the S&P 500 benchmark, and then also this is the S&P 500 ETF projected as well. So not too bad. We're going to go up here and go to price and performance, and 52-week low. Don't really care. They do pay dividend of 1.94. That's pretty good. Compared to an expense ratio of, I think, of 0.04. Here's the 10-year performance, or no, not really. It's like 7-year performance. So they're doing pretty well. Before or after returns and taxes and stuff, you should have made in 1 year about 11% return, and since inception about a 12.24. Boop, 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 boop. And back up to the top, and we want to go to just one right here. There's one that you can see what you're invested into, and I actually already got that pulled up right here. So these are all the funds that are going to be in the actual Vanguard fund. So Apple will be the #1 holding, and that'll have a market value of $12 billion, and they hold that amount of shares. So obviously you can look through this list and see exactly what you're investing into. The further you get along, they have 506 holdings. So the further you get along, the less the actual value of, or the percentage that you're invested in is. But overall, this stock, this ETF is super strong. I don't have it. I'm not invested into it any other place besides my my Acorns account, and that's because I don't feel like it's necessary. Like I totally believe in this ETF, but I don't want to have 4 or 5 accounts with the same ETF, because then I'm paying more money for it. I basically should bring all my assets together and form one super account where I'm invested a lot into this ETF along with the other ETFs. So what I'm doing right now is I'm diversifying my assets and being like, okay, on Robinhood I'm getting into these ETFs. On Acorns, obviously it's to set these ETFs, and then on Stash I can have a little bit more freedom to pick and choose. But for right now, like if you're just a newbie getting into the market or whatever, this is one ETF that I would look at seriously considering buying, because it does mimic the S&P 500, and that has definitely gone up over the course of probably the last 50 to 100 years. So like there's going to be those drops, but overall the stock market continues to climb and continues to grow. So I would look at a stock or an ETF that does mimic the S&P 500. But anyways, let's go ahead and dive into the question of the day, and that is, what is your least favorite place you have ever visited and why? My least favorite place was Lake Erie, Pennsylvania. We went up there to play a lacrosse team when I was in college playing NCAA lacrosse, and it was the worst place. So cold. We traveled from Phoenix, and so when we traveled there, I was wearing like shorts and flip-flops, and I was waiting, and I had like packed like a light jacket because I was like, oh, it'll be cold. Like I didn't realize getting off the plane it was going to be snowy and that kind of stuff. So like totally was freezing when we were at the game before watching them play a different team. It was like the worst, and it's just it's Lake Erie. Let's be honest. That's all I gotta say about that. Anyways, if you guys have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business, Etsy, or coaching, feel free to post those questions down below, and I will try to get my best to get those on the next episode. I do plan on also addressing the other ETFs that are located both in Acorns and in Stash to give you guys a more in-depth look at what specifically the ETF is all about and how to go about investing in that. This is definitely something that I would consider holding, and definitely a long-term hold on that ETF nonetheless. Anyways, until next time, don't forget to subscribe up here and check out how I keep a 9% return on my Stash account, and then check out this other video right here. And as always, thank you for watching. I really appreciate it.